Hi dear friends, how are you all? Welcome to our YouTube channel HR Tutorials India. In this video, we will be discussing about salary calculations. Many employees are confused with CTC gross salary, basic salary and net salary. So in this video, I'll be clarifying all your doubts and I'll be explaining the differences between CTC, gross salary and net salary. So let us get into the video. Salary calculations. In salary calculations, we have three major components, that is CTC, which is called as cost to company, then gross salary, then net salary. Let us know in simple words what is CTC, gross salary and net salary. CTC. The formula of CTC is gross salary plus employee contribution. CTC consists of gross salary plus employee contributions like PF, ESI, gratuity, etc. Then comes gross salary. Gross salary is CTC minus employer contributions. In simple words, when employer contributions are separated from CTC, gross salary arises. Then net salary. Net salary is calculated when employee deductions are separated from gross salary. So let us see how this CTC is calculated, how gross salary is calculated and how net salary is calculated in an Excel sheet. I prepared a salary breakup for an employee named Mr. India and his designation is HR with date of joining. As it is discussed that we will be discussing about salary breakup or salary structure in Excel format. So in this example, let us prepare a salary breakup for CTC of 3 lakhs. We can calculate the same for different figures like 5 lakhs or 10 lakhs. So let us see the different components and how to prepare the salary breakup for 3 lakhs CTC. I have taken few salary breakups which is followed in most of the companies. Basic salary, in government companies it is calculated as basic salary and DA. But most of the private companies it is calculated as basic plus DA combined together, it is called as basic salary. Then comes HRA, house rent allowances. Then comes conveyance allowance, medical allowance, educational allowance, special allowance and other allowances. Each component has its own contributions. So here most of the companies follows a basic salary is of 40 to 50% of CTC, which is fully taxable. When it comes to HRA, house rent allowances, it differs from company to company. HRA is calculated on the basis of metropolitan and non-metropolitan cities. So 50% is for metropolitan cities and 40% is for non-metropolitan cities. And HRA is partially taxable. Coming to conveyance allowances. Conveyance allowances is completely tax exempted. Up to 1600 per month is exempted. Then medical allowances. Medical allowances is exempted only on submission of medical bills, which is up to 1250 per month. Education allowances. Educational allowances exempted 100 rupees for each child. If you have 2 children, then 100 plus 100, 200 is tax exempted. Then comes special allowances. Special allowances is not exempted. Then comes other allowances. These two allowances are depends upon each company. So it completely varies. So addition of all these components results into gross salary, which I have already formulated. Like I have taken this salary as 25,000, basic is 40 to 50%, wherein I have taken 50% of CTC. So here I have taken CTC as 25,000. Here I have put the formula like 50% into F4. So basic is 50% of CTC and HRA is 50% or 40% of basic salary. Here I have taken as non-metropolitan city. So here I have taken 40% of basic salary, 40% of B4. B4 is nothing but basic salary. Then comes conveyance allowances. Conveyance allowances, as I have already mentioned, 1600 per month is tax exempted. So I have taken 1600 per month. Then comes medical allowances. Medical allowance I have mentioned here 1250 is tax exempted on submission of bills, where I have mentioned as 1250 over here. Education allowances, as I mentioned, 100 rupees per child. So I had taken 2 children into consideration. So 200 I have mentioned over here. Then comes special allowances. as I already mentioned, that it varies from company to company. So I have taken 300 as special allowances. Finally, the other allowances. Other allowance is just for adjustment purpose to make it a round figure of CTC. In the previous slide, I have explained that net salary is calculated from gross salary minus employee contribution. So this is the gross salary, we have already calculated it. Then comes the employee deductions. So these are the employee deductions. When we remove these employee deductions from the gross salary, net salary arises. Let us now see how employee deductions are calculated. First is employee provident fund. Employee provident fund is calculated on the basis of 12% of basic. So here 12% of basic. Basic is B4, which I have already told. So 12% of basic comes to 1500 rupees. Then comes ESI deduction. ESI is 0.75% of gross salary. Here there is a condition like ESI is applicable for employees whose gross salary is less than 21,000 or 21,000. Here the gross salary is less than 21,000. Hence ESI is applicable and employee contribution of ESI is 0.75% of gross salary. So here I mentioned 0.75% of gross salary, which is B11. B11 is gross salary. So here ESI is calculated. Then comes professional tax. Professional tax employee deduction. Professional tax varies for different states. Each state has their own slabs. In this example, the person is from Telangana. So as per the Telangana slabs, if the gross salary is about 20,000, then the professional tax will be 200. So I have given here a formula. If gross salary is greater than 20,000, then professional tax will be 200. Then comes TDS, which is tax deduction at source. Depending upon the salary and depending on the income tax slabs, the tax will be calculated, which I will be explaining in detail in the upcoming videos. So as of now, as the salary is below 5 lakhs, I have taken as 0. Now when we add up all the employee deductions and subtracted from gross salary, we will get net salary. See, I have put a formula B11 minus 12, 13, 14, 15. B11 is gross salary, 12, 13, 14, 15 is employee deductions. So once I deduct employee deductions from gross salary, net salary has arrived. Now let us calculate the CTC. In the previous slide, I have explained you and I have calculated the CTC, and the formula of CTC is gross salary plus employer contribution. So here gross salary is already calculated. So let us know how to calculate employer contribution. So provident fund have employer contribution of 13% of basic salary. Here I have calculated the employer contribution of PF. So employee contribution of PF is 13% of basic salary. 13% of basic salary. Basic salary comes in the field B4. Now ESI contribution from employer side. ESI contribution of employer is 3.25. In the same way how we have calculated ESI from employee deduction, in the same way we calculate the ESI from employee contribution, that is 3.25% of gross salary. Then comes the gratuity. So gratuity cannot be calculated on monthly basis. Here we calculate the gratuity on yearly basis. Gratuity has a formula, and the formula of gratuity is basic salary divided by 26 days into 15 days. So B4 is the basic salary divided by 26 into 15 working days. This is for 1 year. If the number of years increases, if it is for 2 years, here it will come for 2 years, and accordingly gratuity will be calculated. Here this rupees is for year and divided by 12 results into monthly gratuity. Then comes bonus. Bonus is an employer contribution. Bonus is given to employees in a manufacturing sector or industrial sector. But then I have calculated here to help you to understand how even bonus is calculated. Most of the companies, bonus is calculated on 8.33% of the basic salary. So I have given the formula 8.33 of the basic salary. Then comes the variable pay. Variable pay, it depends upon each company. Few companies give the variable pay and few companies don't pay it. But then I have taken as a variable pay of 100 rupees, an approximate figure. So when we add up all the employer contributions and add to the gross salary, CTC will arrive. So I have given here a formula of B11 plus B17, 18, 19, 20, 21. B11 is gross salary. Then here comes all the employed contributions, which is B17, 18, 19, 20, 21. 17, 18, 19, 20, 21. So altogether the CTC has arrived. So dear friends, hope you understood how to calculate a salary with this example. When an employer gives and when the management asks you to prepare a salary breakup with CTC of 3 lakhs or 5 lakhs or 10 lakhs, you can use these formulas and you can use this type of salary breakup and you can calculate the net salary, gross salary, then CTC. I have already explained about the basic salary, HRA, convenience allowance, medical allowances. Earlier we used to have all these medical allowances, education allowances as tax exemptions. But in the financial year 1920, we have tax exemption that is called as standard deduction. So the standard deduction of 50,000 rupees per annum is completely exempted without submission of any bills. So the medical allowances and the convenience allowances has been replaced by standard deduction. Now it comes the PF contribution and ESA contribution. As I already told you, employee contribution is 12% of basic salary and employer contribution is 13% of basic salary. Here combined together 12 plus 13, the total EPF contribution is 25%. This 12% of employee contribution goes to EPF account and 13% of employee contribution goes to 4 different accounts. 3.67% of basic salary goes to EPF account, 8.33% of basic salary goes to pension account, 0.5% of basic salary goes to EDLI and 0.5% of basic salary goes to admin charges. About this PF contribution and different accounts, I will be making a different video on EPF contributions and deductions and calculations. Then comes ESA contribution. ESA contribution has 2 contributions, employee and employer. I have already calculated in the salary breakup. So together total ESA contribution is 4%. Employee contribution is 0.7% of gross salary, whereas employer contribution is 3.25% of gross salary. So 3.25 plus 0.75 comes together as 4%. So my dear friends, hope you understood what is salary breakup and the different components of salary and how to prepare a salary structure and how to calculate CTC, how to calculate gross salary and how to calculate net salary. So dear friends, hope you understood the salary calculations starting from CTC, then gross salary, then net salary. All the salary components like basic salary, HRA, allowances, PF contribution, ESA contribution, TDS, professional tax, gratuity, etc. So if you have any queries, please comment in the comment section. I will be happy to answer all your queries. If you like this video, please subscribe and share among your friends. Thank you for watching this video. Have a nice day.